So let's answer the question that we asked at the top of this video. Is your money safe with trading 212? Hey guys, welcome back to the channel. So as you know, we speak about investing here, and I've done quite a few videos on trading 212, and I know that many of you have used my link to get yourself a free share to get you started as first-time investors. Now, on the review side of things, my trading 212 video has done wonders for my channel. It's got me about 2,500 subscribers, and it's my most successful video on the channel so far with 40,000 views. However, with trading 212, they've had some issues recently. They've had some bad press, and that's what I want to talk about in the video today. In fact, if you were paying attention to the app yesterday, you probably received this notification in the app. I want to talk about that. I want to talk about some other bits and pieces as well, which I think are important, and ultimately answer the question, is your money safe with trading 212? And by the way, guys, don't forget to get a free share with Trading 212 using my link below. If you want to bag 2 free shares, you can use my link with Stake, who are giving away 2 free shares all the way through December. You just need to fund your account within 24 hours of opening. Now, before we get started, if you've not listened to the podcast this week, go and listen to the episode this week. There are some real gems in there. I know that many people are chomping at the bit to get into 2021 because 2020 has been a challenge. It really, really has. But I'm trying to challenge people in that episode to think about the lessons that we've learned this year and how we're going to be better next year. Introducing a fundamental principle which I think is absolutely key, one that I practice. So definitely go listen to that episode. Let me know what you think. But trust me, it's worthwhile. It's going to prepare you for 21. Secondly, if you're new to this channel, we do talk about investing. Consider subscribing, smash the like button so people just like yourself interested in investing and trading 212 specifically and other apps just like them can also find this video and hit that notification bell. I post every Tuesday and every Friday at 5 p.m. So let's talk about trading 212. There are 2 things that I want to talk about in this particular video. This is the first one. To begin speaking about this, I want to go back to last month, November 3rd, because if you try to access your 212 account on November 3rd, you probably recall that there was a portion of the day where you could not access your account. I tried the app, I tried desktop, I couldn't log in. I couldn't see anything at all. And my immediate response was to go and have a look at Hargreaves Lansdown because that's where I got most of my direct stocks. That's where I hold most of my money in terms of direct investment. Lo and behold, when I got to Hargreaves Lansdown, I also couldn't access them either. So in fairness, the issue that they had that day wasn't exclusive to them. Other people were hit. Hargreaves Lansdown were hit. Fidelity had the problem. Vanguard had the problem. Even the likes of Merrill Lynch had the problem. Now on the day, if you're on Twitter, 212 posted this tweet on Twitter to say that they were subject to a DDoS attack and they were working really, really hard to resolve the problem. Now, DDoS attacks, they have become more popular within financial markets as of late. Back in August, there was a big attack in New Zealand for a period of time. But essentially, what a DDoS attack is when a third party, a bad actor, decides to flood trading platforms with just a stupid amount of traffic that essentially crashes the system. It's not necessarily a big deal. But what I will say in mentioning this, in trying to position where we are right now with the issues with order execution, is that ever since then, there have been no problems with the likes of Hargreaves Lansdown that I have noticed. Now, the 2 things may be completely unrelated, but I don't think that they are, which is why I wanted to cast everybody's mind back to November 3rd. And the reason for that is because you have to look at why this is actually happening. And we're going to get into that very, very shortly. Now, the reality is with Trading 212, they don't execute all of their trades themselves. They have an intermediary called international brokers. And actually, this problem is an international broker problem. It is their problem. They were also the problem when it came to the DDoS attack. The tweet actually said, a later tweet, I should say, later said that their third-party service didn't do what was expected. Now, like I said, Hargreaves Lansdown have had no other problems after that initial occurrence on November 3rd. However, there seems to be this delay in order executions with Trading 212. I know it was an issue a week ago. That notification that came into the app yesterday just shows that this is a continual thing that is an issue for people. Now, who is this going to impact? Because I know that many of you who watch me here are looking at stocks. You're also looking at the ability to trade as well, potentially going into the CFD side of Trading 212. Now, if you're an investor, if you're looking to pick up some Tesla stock, some NEO stock, and you simply want to hold it, or you're looking to build a pie, for example, of dividend aristocrats, and I've got some videos that are worthwhile watching again, if you haven't viewed those videos, then you're not really going to be impacted. If you're looking to invest, buy these companies and hold them for the long term. This isn't going to be an issue for you. Yes, it might take, an hour, and, even in an hour. And that's really, really bad, really, to be honest, to place an order but not have it executed for an hour. That's not ideal. But if you're investing for the long term, doesn't really matter. Doesn't really matter. However, if you are a trader in the CFD side and you are day trading, you are scalping, then this is going to be a real issue for you. And I would imagine that there will be a number of people who are really annoyed at the inefficiencies that this has caused within their trading, because essentially this is going to cost people money. If you're day trading, looking to get a little bit of margin on a stock price, on something going up or going down, you need to be able to execute that trade instantaneously. And if you have delays of, even a minute, if you have delays of an hour in some of the instances that I've been reading online, then it's costing you money, and it's really denting your confidence in Trading 212. But again, I think you have to look back at why this is potentially happening. Now, Trading 212, the numbers for this year are absolutely insane. They've had like 400,000 new accounts and 600,000 new funded accounts. And because this is an issue with interactive brokers, you have to ask whether interactive brokers are able to cope with the level of trades that come with that kind of growth. This is kind of a story of victim of your own success. And the answer to that is, well, I don't think that Trading 212 was ever built for this kind of volume of trading. I just don't think it has. I mean, with everything that's happened this year, more and more people are interested in trading, are invested in investing. And particularly on the investing side, what they've done is groundbreaking. It is revolutionary, because they are offering the ability for you to access the markets zero commission and be able to buy fractional shares, essentially removing all of the barriers that you would have had 5 to 10 years ago. And, just look at YouTube. There are multiple channels like mine talking about Trading 212 and how they can help you get started with the market. They're giving away free shares as well, which is a huge pull for first-time investors looking to get started. And off the back of their success, there are new incumbents into the market as well, trying to move this idea of investing fractionally at zero commissions forward, and for good reason. So part of why this is happening is the fact that they have grown so much this year, and they will continue to grow. So the question is, can interactive brokers actually deal with this level of volume? On the investing side, you're going to be fine. But if you are trading on the CFD side, then this is something that you definitely need to consider going forward if you're trying to pick Trading 212 as your potential platform for trading CFDs. Now, this raises the question of, well, if this is going to put you off using them and you do want to trade, who else can you use? eToro is a really, really good option. There are a number of them out there. There are IG, there's eToro, for example, just two right there that you can use. You can use one of the collaborations that I have this month specifically with really, really low trading fees and trading costs that you can use. You'll hear about them in a few weeks' time. But if you're serious about that, it's really important now that you shop around for the best platform for you. As far as I'm aware, eToro don't have any issues with executing orders. This is literally just something that Trading 212 have got to contend with, and I'm sure that it is on their radar. But if you are thinking about moving or looking at providers for day trading purposes or trading purposes. I do have a video on eToro. You can watch that right there. There is also a link in my bio as well for you to use them also. The second thing that I want to talk about when it comes to trading 212 is this. Now, if you are on the CFD side, this will have been something that you would be very, very, very unpleased about. I know that I would be really annoyed about this. And the reason why people are screaming at the rooftops about their displeasure of this is the fact that Trading 212 didn't really give anybody that much notice. They had the announcement December 1st, and these changes basically came in within 24 hours. So you had very little time to react if you're trading with leverage. Now, I'm not going to go into the minutiae of what leverage is. That will be for a completely different video. But essentially, leveraging is where you trade by borrowing some additional capital to get you volumes within your trade. And what Trading 212 have essentially done here is they've reduced the margin that you can use to leverage. They've reduced it from 1 to 2, so 50%. So it means that essentially now where you could leverage or trade on leverage with a bigger amount, all of a sudden that is reduced. This may have potentially cost people money, and people are annoyed, threatening to go to the FCA because their service is subpar, compounded by the fact that it's taking longer to execute orders. For many people, this is not ideal at all. And look, I can see why Trading 212 have done this. With the issues that they've had with executing orders and the popularity of people trading. I mean, just look at the opportunities that people have enjoyed with the likes of Tesla, with the likes of NEO recently. There is good reason why they do that. And you have to understand that, for every trader who leverages a certain amount, they have to make the opposite trade and actually hedge against it. So they're then not left holding the bag if anything were to go wrong on the other side of that leverage trade. So I can understand why they've done it, and I can understand why they've done it so quickly. However, this has really annoyed a lot of people. And look, again, you may be shopping around for other platforms that will give you a little bit more notice if you are trading on the CFD side. But again, if you're investing, like many of you are that I know who watch this video, this is not going to impact you at all, because on the invest side, you wouldn't leverage and purchase stock anyway. So it is inconsequential if you're investing. So let's answer the question that this video is really aimed at answering. Is your money safe with Trading 212? Well, in my personal opinion, yes, your money is safe, and I'm going to give you my reasons as to why I think so. First and foremost, Trading 212 is no longer a startup fintech company. There are lots of startup fintech companies that are still pretty much in their infancy, that are doing well but still struggling to make profit. Trading 212 is now making profit. They are very, very well established. And you can't compare them to the likes of, Monzo or the likes of Starling or Moneybox. They have more depth in terms of experience and reputation now than those guys. And you just need to have a look at what's going on right now in the world. Most people, if they're looking at investing in the markets now, Trading 212 is the go-to place. And for that reason, I feel as though, you're going to be safe. And more importantly, because of this second point. Regardless of how you look at this, and I say this in all of my reviews, it's really important that whenever you use any provider, any service in financial services where you are giving them money to trade or invest, or you're giving them money as custodians to provide a service to you, that you have to make sure that you have financial services compensation scheme coverage. And you do have that with Trading 212. And that's up to £85,000. Now, clearly, that then begs the question that if you are in a position where you have more than £85,000 in an account with them, do you want to move it? Do you want to think about using 2 or 3 other trading platforms? I don't know. That's a conversation that only you need to have, and a question that only you can answer for yourself. But knowing that you've got £85,000 worth of protection under the Financial Services Compensation Scheme is all about protecting your downside. And that's the whole point of investing, guys. We want to take calculated risk. And as unlikely as a downside, them going bust might be, it's an important point to cover and make sure that you're protected. And luckily, the regulator, the FCA, are adamant that they pay into the scheme to give you that protection. So is your money safe? Absolutely yes. Am I going to continue to use them? Absolutely yes. I will be watching things closely. I think there are some issues and some decisions that they need to make as a business. I'm not part of the team there. So far from me saying what I think that they should do, but I think that they have to make a call on whether the delays in order execution is going to represent a significant risk to their business. If they deem that it is going to be a significant risk to their business, then they may decide that they part ways with Interactive Broker and find an alternative provider who will be able to deal with the volume of trades that they see coming through. I honestly think that they're surprised and they weren't anticipating this volume of trades. But as with all businesses, when you start, you evolve and your services evolve according to what's happening on the ground at any given time. So I think there are some clear, important, and decisive decisions that they have to come to in 21. But will I be using them? Yes. Will I be monitoring the situation? Absolutely yes. And look, that's my take. I'll be interested to hear your thoughts and whether you feel comfortable about what's happened. Have you noticed that you've been placing trades and they've been taking a little bit longer than you anticipated? Are you using the CFD side? And have you been impacted and lost money because you couldn't place a trade quickly? Let me know in the comment section, and also let me know if you want more videos like this talking about maybe some of the business angles when it comes to actually investing and some of the operational side of things as well. But guys, thank you as always for paying attention. Let me know your thoughts in the comment section. And this isn't the video that you're supposed to watch today. I had a completely different video planned. We have to push that back. We'll cover that on another subject, another time. But guys, whatever you're doing, please stay safe. I know a lot of people are out right now preparing for Christmas shopping. Let's have a good one. Let's be responsible. I'll catch you on Friday.